Good morning, neighbors, and welcome back to the neighborhood. I am Squealer D, and I am back again. And this time, we are back on learning the basics of how to trade stocks, a beginner's guide. We went over what the stock market is, we went over what a stock versus a bond is. And now, my friends, we are going to dive into the basics so that we can get trading. I am anxious to get us on Ameritrade, Paper Trader, or Webull. We'll talk about those more when we sign up for one. I already am signed up. I've given it a go. I tried it for about a week before I started this so that I would kind of know how to use the tools so I could help you use the tools. But I am a beginner and I can't wait to get this started. Guys, I got my coffee. Squealer D, D for dinero, because we are about to learn about money. So let's just jump in on how to trade stocks, a beginner's guide. And this is from Bankrate. Bankrate has some good articles, free articles, just like other things. So let's go over this. This is written by James Royal. James Royal is a principal writer in investing and management. Well, all right, James, let's read your edited by Brian. And Brian is managing editor for Wealth Team. We should make our name like Wealth Team. That's the homework for tomorrow. What kind of team could we, guys? Wealth Team, that's a cool name. We got to come up with something cooler than Wealth Team. That's our goal. We could be the neighborhood investors. I don't know. If you come up with something better, you let me know. Let's get going. James and Brian, they have some good information for us, guys. And it's okay if you don't get this the first time. Like I told you guys, I started about 3 weeks ago now. And I spent the first 2 weeks just trying to figure out Thinkorswim, which is TD Ameritrade's paper trader. You can also trade real money on it, but I was trading paper, just fake money, learning how to trade, and it was so much information to learn. Like, not only do you have to learn to do the program, but you also have to know how to do the money. So you have to learn an entire computer program and an entire money program. So we have 2 programs to learn, guys. And that's okay. It's okay. Even if we had 100 programs to learn, we could still learn it because we are capable human beings. If Mr. James Royal can write this article and Mr. Brian Beers can edit it, then you and I and anybody else watching can learn these words and learn a program and learn to trade on the stock market. That's just basic facts, guys. Let's jump into it. So trading stocks may sound glamorous. Yeah, like money and stepping on people's necks, guys. But behind the scenes, it's actually a lot of hard work and can involve extensive research. And that's where we are right now, guys, and it doesn't stop. We're going to research how to do this. And then that is going to teach us how to do the research for the job. You guys can call it a job. You can call it a future. You can call it a career. You can call it a hobby, whatever you want to call it. You have to do research for it. You're going to have to do research to see which stocks are the ones you want to get involved with because you could lose your money. You have to have risk management, and risk management includes research. So, while it's not always easy, new investors can take a number of steps to begin investing successfully, including finding a style that works to grow their portfolio over time. And your portfolio is your group of investments, my friends. So all of us, we want to have a nice portfolio. So that is our goal. We could be called the portfolio princes, even if we're not all princes. I mean, royalty is royalty, right? Like you could call a woman a prince if we're all princes, I think. I don't really know. I'm not a princess. I'll think of another word. If you're looking to trade stocks, one of the first things you'll want to consider before getting started is to figure out what type of trader you desire to be. So, guys, I told you when I started this, I thought I was going to be a day trader. And right now, I'm not quite sure if that's where I'm going to fall. So, we will figure this out together. Are you an investor looking to buy and hold stocks potentially for years? So, or I do want to do this. I want to buy and hold stocks potentially for years, kind of like Berkshire Hathaway. They buy stocks and they buy companies and they manage the companies so that they can make money off of them, and that's long term. Like he has, Warren Buffett buys mostly things things that are helpful. He likes to buy farm property, which should scare us all. When people like Bill Gates and Warren Buffett are buying all of our our farming land, that tells us that money isn't going to be worth as much in the future. If the richest of rich stop investing in the thing that they created, money, guys, and they start investing in things that we have, and by we, I mean us poor people, 98% of us, 99% of us. You guys, I found out that there are only 22 million Americans that are millionaires. 22 million Americans that are millionaires. Out of how many people do we have in this country, guys? How many people in? I can't even spell America. America. Okay, I was thinking 322. So 331. 331, almost 332 million people. And only 22 million are millionaires. What? You guys, that's 6%. It's probably less than 6%. Around 6% of the United States are millionaires. They say that you need $1 million for your retirement in order to be okay. That means that only 6% of the United States are going to be okay in retirement. What? Guys, what are we doing? And now, like I said, Warren Buffett is going long in farmland. That makes me think, like the Great Depression, people start investing in things that are real, things you could touch, food, property. When they don't want to invest in money, the thing they made, guys, they made money. They made the stock market. They make options and shares, which put puts and shorts, and they create actual wealth for themselves. They turn their money into a minimum 10% profit every single year. So when they start buying our farmland, we want to start buying and holding long term also. So yes, I want to be an investor that looks to buy and hold stocks potentially for years. Are you going to exchange shares more frequently, perhaps over a few weeks or even the course of a day, making you a day trader? So when I went on TD Ameritrade, I tried to pretend. They give you a lot of fake money. I mean, it's fake money, guys. You could have $100,000 in fake money. But I don't have $100,000 in real money. So I wanted to practice with a little bit. So I pretended like I only had $5,000. And I made all of my trades pretending like I only had $5,000. And that's what I kind of had to do. You can't just invest $5,000 long term and expect to grow it quickly in the stock market. You could grow it for sure. If you put $5,000 in, if you guys put $5,000, I just read an article. It said, if you put $5,000, no, that's not what it said. It said, if you put 1,000, now I can't remember, guys. It was crypto grow since Biden took office. So it was an article about how much. Oh, so it was $100, guys. Listen to this. Listen to this, guys. This is just with $100. So if you invested $100 in Bitcoin Ethereum, and Dogecoin when Joe Biden took office, here's how much you'd have now. So these are Bitcoins, guys. These are not stocks. They're Bitcoin. Fake money. Fake coin. Excuse me. Good coffee, guys. Okay. So, Joe Biden won the 2020 presidential election after defeating incumbent Donald Trump. The current president has outlined many priorities and signed many executive orders since taking office, including some that deal with cryptocurrency. Here's a look at how some cryptocurrencies have performed during Biden's time in office. So this is what you guys have to remember. Bitcoin is down like a dog right now. Dogecoin, it's been going up and down all day. But if you think about it in the way we're about to think about it, you have to think about it long term. What happened in 2022? Biden signed an executive order to establish the first ever comprehensive federal digital assets strategy. The executive order was put into place to establish cryptocurrency regulation. So now, like the SEC, they're regulating crypto. Because why? Because we've seen in the news all these articles. You guys, just type in crypto scams. Look at these fake websites, phishing scams, pump and dump schemes, fake apps, fake celebrity endorsements, giveaway scams, fraudulent initial coin offerings, promises of guaranteed returns. All of these things, guys, are fake scams. But just like we learned about the Buttonwood Agreement, that's what they were doing with the Buttonwood Agreement. And what did? They regulated it so that they could keep their money growing. And now they've regulated crypto so that they can keep their money going. We have to remember that. Don't get scared. You might lose everything you own if you do not have good risk management. But if you understand risk management, and we will learn that, you guys, we will go over risk management. We are going to beat risk management into our heads so that we don't lose money. There's always a chance of losing money. But these people, these rich, what did they call them in the last stream? The creme de la creme. What they do is make money, keep their money. They establish regulations. SEC, the Securities Exchange Commission, so that they can keep their money. Somebody with $1 billion isn't going to let you take their $1 billion on the stock market. I'm sorry. They're never going to put $1 billion into Dogecoin. If all they have is $1 billion, that's against their risk management to put $1 billion in Dogecoin. So they regulate it. They put a little bit in. They can manage the risk. And when it goes up 5% in a day, they just won. If you put $100,000 and you get 5% on it, you just won $5,000 in one investment. You could trade that in a day and have one and made $5,000 in a day in minutes, in actual minutes with these coins. And then if you think long term, let's look long term. They're telling us that if you would have invested $100 in Bitcoin, Ethereum, and Dogecoin when Biden was elected to presidency in November 2020. So if we would have did that, guys, Bitcoin started at 3,600. Bitcoin's current price is 20,000. Guys, it's went down by $16,000. So if you invested in one Bitcoin, you would have paid $36,000 when Biden became president, and now your Bitcoin would only be worth $20,000. Do you see how your money would have lost $16,000 in 2 years? That is how people lose their shirts. You cannot put all of your money into one place, but you also cannot be afraid of this losing money because, guys, there's other things to look at. A total $300 investment on January 30th would be worth $880 today, representing a return of 193.3% in just over 2 years' time. Dogecoin has went up, guys, so much that if you put a $100 investment, it would be worth $719 2 years later. So it's not you guys think about if we add zeros here. Think about if this 100 becomes 1,000. Add a zero, add a zero, add a zero. If this became 10,000, add another zero, add another zero. Now we're talking about $7,000. If this became $1,000,000 that you had, not your only $1,000,000, guys. We're talking about people that have multiple millions of dollars, and they can take one of those millions and they can pop it into Dogecoin, and now they have $70,000 in 2 years. They made $35,000 a year just to buy some Dogecoin, Ethereum, and Bitcoin. And if you look at the news, everybody's talking about how cryptocurrency is a scam. But if you invested when Biden became, you wouldn't have lost. You would have won. So over time, the stock market always wins, guys. We talked about this last time. The average gain for the stock market is 10% a year. Sometimes it's not going to be 10%, guys. Sometimes it's going to go down. But on average, if you leave your money in the stock market for 10 years, you are going to have a positive return. That's what these rich people are doing. They've been doing it since the Buttonwood Agreement. They took their money, they put it in the stock market with their regulations to control their money, and they made a whole freaking bunch. So if you can understand their regulations, they're putting these in place, people, not us. The president, Biden, does Biden own, guys, does Biden own stocks? Because we know Nancy Pelosi owns stocks, right? Nancy Pelosi was selling stocks before all of the corona thing. A lot. Both sides, guys. We're not talking about Democrats because I said Pelosi. We're not talking about Republicans. We're talking about both sides of the aisles. They take advantage of our stock market while in office. So these people are in office, hearing about coronavirus, hearing about how horrible it's going to be. And then they sell their stocks or they buy stocks. How many people do you guys think bought stock in face masks when they found out that there was going to be a global pandemic? Don't you guys think that people like Pelosi and all of the Congress, that they heard a little bit before us that we were going to go into lockdown? They did. And they moved stocks around. It's proven. You can see it. You can go and look, Google it. People that made stock movements after they found out about the coronavirus, but before us humans. They're not humans, guys. They're above humans because they know things before we do, and they're allowed to make money moves before we do. So in 2014, Biden says he has no stocks, bonds, or savings accounts. But you guys know what he can have? Just because you don't have stocks or bonds, I don't believe Biden. I have no savings accounts. Okay, but how many retirement funds does he have? How many? How many Roth 401s? How many? I don't even know what they're all called. But just because you don't have a savings account does not mean that you're not on the stock market. Just because you don't buy a stock or a bond does not mean you're not on the stock market. You can trade options, and that's not owning a stock. We learned that. I learned that. We haven't went through that together, guys, but stocks have options, which are like puts and calls, and we are going to go over those, and they're not bonds. Biden's team could be putting his money, and then he puts them in his wife's name. Okay, so that was the other thing I was going to say. He didn't say we don't own a single. I thought he said that they don't own a single stock or bond. His wife, he just put it all in his wife's name. Ooh, good president. Okay, I'm not talking about any president, but good. If you say you don't own a single stock or bond, but it's in your wife's name, you own it. When she dies, guess who gets it? I don't like that, guys. I don't like how rich people and people with money lie to us. It's my biggest pet peeve. Let's keep going because we need to get smarter so that we can control our own future. We don't need people like Biden telling us how to live our future if we are not even taking our own control of it. So let's take control. We know now that we do want to go long term, but we also want to exchange frequently so that we can change our little money into big money and then our big money into holding, like Berkshire Hathaway. We gotta have, like, I understand that rich people kind of make us poor people mad. It's like jealousy. It's that envy. Like, we want what we don't have kind of thing. And that's okay. It's okay. It's okay to be jealous, guys. It's not okay to act on your jealousy. But everybody being jealous is a natural reaction to wanting something. We just have to learn to control it, how to be an adult with your anger and jealousy, and then that's okay. You use your jealousy to better your life instead of destroy your life, and it could be a positive thing. So I take my little bit of jealousy that these rich people started out, they had better bootstraps than us. The Bidens have always had bootstraps. Joe Biden wasn't looking around for bootstraps to pull up, guys, to become president. He has always had bootstraps, and he was smart enough to put those bootstraps, once he got them to the sky, he put them in his wife's name. Okay? So we just have to be smart like that too. So that's an option. You guys, it's an option. Think about it that way. You can put your money in your wife's name and do the exact same thing Joe Biden did. And I know that that's why a lot of people don't want rules to change. I was thinking about this the other night. Before we go any further, let me talk about this really quick. Sometimes I wonder why people don't want things to change for poor people. For instance, certain rules are made to hold poor people down. Why are poor people paying into an income tax out of their job? If you make under, let's say, $50,000 a year, in most places you are below the poverty line, especially if you have a family, don't have kids. And $50,000, the majority of the United States don't make $50,000, guys. We just don't. But we pay the majority of taxes. Why? Because rich people made the regulations, guys. Rich people made the rules. So of course they want the majority of the money to come from the majority of people. There's more of us. If they paid more and we paid less, they would have to pay more for everybody. There's less of them. I just told you guys, there's only 21 million millionaires out of 331 million people. 6%, guys. Only 6% of us even will have $1 million. Right now. It's the biggest it's ever been. It's the most it's ever been. It's 6%, guys. So it was even worse back then when they made the Buttonwood Agreement. There was less rich people. There were less people involved. You had to start smaller. So what we have to do is understand what they do, including things like Joe Biden putting your money in your wife's name. We have to understand those things so that we can do it to grow our money. They've been growing their money all this time, guys, since, 1792 when the Buttonwood Agreement was signed? They've had a long time ahead of us. So instead of being jealous, instead of being mad, instead of believing that these people are humble, Biden's humble. This thing said Biden gets humble about his wealth. Biden is not humble. He's not, guys. He's president of the United States. He worked in Congress or whatever, Senate or wherever the hell he worked for 40 years before he was president. He was vice president before he was president. His children are trading on the stock market. His children are making deals with other countries. He is not poor. He is not humble. Don't get confused about the words that they use about these rich people, ever. Don't. You will get confused if you are not educated. So get educated. Let's do it. So traders are those individuals who work in the market looking to take advantage of short-term price moves and score a relatively quick profit. Guys, that's what I'm talking about. We get our money up and then we save long-term, and we don't be wimps. I'm not saying we lose it all, but we have to learn that right now. This is what we're getting in our head. good money decisions. As we read this, we're thinking about rich people. We're thinking about what they do to keep their money, what they do to make their money, and we're going to follow them, guys. If you need to get up top of a hill and there's other people walking up the hill that have been up there before, what's a good idea, guys, if you don't know how to get to the top of the hill? Follow the people that have been up before. People like Berkshire Hathaway, Warren Buffett, Donald Trump, all these rich people, they've been to the top of the hill. Guys, they're living up at the top of the hill. Just follow them up. It's easy. We just have to use our brains and learn. And we have to remember the SEC and regulations they put in place are to keep their money. We can't all be rich people. If we were all rich, inflation, you guys would understand. If everybody had a lot of money, the worth of money would fall. So therefore, and also, think about it this way, guys. If everybody was a millionaire, how many people would want to work at McDonald's? How many people would want to feed the poor? I'm serious. Like, how many people would want to work at a pizza place? Papa John's. How many people? How many people are going to want to work at a grocery store? We have to have grocery stores, guys. I went in the grocery store. I went into a Safeway. And the people there, they're stealing. They're threatening the workers. They're destroying the store. Out of hand, the crime. It's a drug problem, guys. We got a drug problem in our country. And those people with a drug problem, they're not getting rich, guys. They're staying poor. And somebody has to feed those poor people. Somebody, there's a lot of them, guys. They still get money, even though they do drugs, even though they're never going to be in the stock market. They still get money. Some of them get disability. They have an income every month that they could grow. Yeah. Guys, if you have money, you can grow it. It doesn't matter if it's $100 a month. You can grow it. But these people are out here, they're not growing anything but problems. Problems for our country. So if they're out there growing problems, there's people out there that have to take care of them. We're talking about CNAs that are going to take care of people that have diabetes and their legs get cut off. Not everybody gets to be a millionaire. Some people have to be poor in order for the system to work. So you can be stuck down at the bottom with these poor people making bad decisions like drug use and not learning. I'm sorry, but that's a bad use of your life. I'm 40 years old, and I feel like for 40 years I did a bad use of my time. I should know this already. I should have learned what all the rich people learned as children. Their parents explained this money to them. How many times have you had a money market conversation with your child? This is things we don't teach our children. But rich people do. People that have something to lose, they do. Why do they feel like they have something to lose? Because they have money. And we don't, the 99% of us, why do we feel like we don't have anything to lose? Even though we're breathing, we're right here. We have our lives. We have our children's lives. We have our happiness. And we have each other. But we don't feel that, I guess, like that urgency to change things. And that's what we are changing right now. We're going to get up every morning, every day a little bit earlier. Today is 8:42 and we've been on here for 30 minutes. So we got on at about, 8:15, guys? 8:14, 8:10? And we got to get up earlier every single day. This is part of habit training, guys. Habits to learn about money, be interested, be happy, be excited. This is not scary. This is not, cry time. This is happy. We are up. It is 8:42 in the beautiful morning in the Pacific Northwest, and we are learning why we should trade stocks. So even if we're not doing it yet, we are already winning. We are already doing more than the people at the grocery store going to start their shift and serve horrible people all day. We are already doing better than them. And it's not about being better than people. It's about doing better than people. I don't want you to walk around talking about, I'm better than the poor people. I want you to walk around talking about, I do better than the poor people. I am doing better for me than the poor people do for themselves because I am trying to get better. That's it. That's all you have to do. I promise. If you look at your life that way, like, I have to do better for me, not for my daughter, not for my son, not for my mother, not for the world, but for you, and you really believe that, you'll do better for everybody. It just is what it is. Like, I can't say it any clearer than that, and anybody else can't deny it. If you believe in yourself, you will do it. If you want to get up earlier, you will get up earlier. If you want to go to the gym more and work out, you will. That's coming too, guys. The only way to get your mind right, this is only day number 3, guys. We got a whole series coming. I'm talking about hundreds of days of training. When we're to day 100, we'll have a party. But also on day 100, I plan on having muscles, guys. I want to work every muscle in my body. I'm talking about getting my brain smart and getting my heart smart and my body smart. That's what we have to be on these days. If things go bad in the world today, where do you want to be? On the top or on the bottom? I want to be in the middle or on the top. And you can't get there if you are unhealthy. And that means everything, guys. Healthiness is global. We're talking about your entire well-being being healthy. We're talking about your mentality being healthy. Are you experiencing depression? Are you experiencing other things that are holding you back from getting better? Are you overweight? Are you underweight? Are you experiencing other health issues? I had 2 major back surgeries. It held me back from life for almost 12 years, guys. 12 years, 2 back surgeries. It almost took me out. I'm 40, and I've been doing this all through my 30s. I wasted my entire decade of my 30s to back surgery. Can you afford that? Let me know in the comments. If you watch this, you let me know in the comments if you can afford to take a 10-year detour for back surgery. Because it's coming if you don't take care of your health. It might not be back surgery. Maybe it'll be 10 years of depression. Maybe it'll be high blood pressure. Maybe it'll be high blood sugar. Maybe it will be a bad back without back surgery. Maybe it will be MS. Maybe it will be Parkinson's disease. It's at an amazing, amazing rate that Americans are getting autoimmune disease, guys. Autoimmune diseases are taking over Americans because we eat so much processed foods. That's my other goal. I'm getting 100% globally healthy, guys. I'm getting my mind right. I'm getting my body right. I am going to be working out more. As soon as we get a good rhythm going with learning, we're going to add something else in. And you can choose to add something else in, or you can just keep with the learning. Or you can just watch my videos and enjoy watching me go. Maybe it'll help you. Maybe sometimes all you have to do is see somebody else do it. And then eventually you'll do it too. And that's why I'm here. I could do this all by myself, guys. I could not record this. I could sit here and talk to myself and ask myself these questions because I would. That's who I am. If I was sitting here, I'd be like, what the heck? What does Biden have in stocks? And I would Google it and I would look and I would do the same thing I'm doing with you guys. But I want you to have this information broke down my way. Maybe you learn the same way as I do. I don't learn the same way as other people. I know a lot of people can read and then they understand it and they go about their way. I have to read something, talk about it, teach it to somebody else, and then it will stick in my head. I have a teacher's mentality of learning. If I can explain something to somebody, then I know it. And that's how my learning goes. So, this is selfish endeavor. And you have to be selfish, my friends. Listen to me. You have to be selfish sometimes. If you don't take anything else from this live stream, take that. Be selfish. Be selfish for yourself. Care about yourself more than you care about other people sometimes. It's okay. If you don't, who will? Who will? If you don't put yourself first, when is anybody ever going to put you first? Try it. Try it with something little. It's okay. Don't feel bad. When somebody tells you that you're selfish, grin to yourself. It's okay. It's okay to be selfish. They're selfish. They were selfish to tell you you were selfish. Right? I mean, they didn't need to tell you you were being selfish. Somebody tells you you're being selfish, they're being selfish. What is it their business if you're being selfish? Yeah, you're looking out for yourself. It's a good thing. I'm not telling you to step on people and hurt people, but be selfish. Do you think that the rich people are not being selfish with their money? Do you think that the rich people are not making these regulations to keep their money? That's selfishness, guys. Be selfish. I mean, I'm not telling you to be a bad person. I'm telling you to care about yourself. Be a good person to yourself, because that's where it starts. If you can be good to yourself, people will be good to you. And if you can be good to yourself, you'll be good to others. Bam, bam, bam. Win, win, win. Everybody wins. Everybody's good. And it's that simple. It's that simple. If you are good to yourself, other people will be good to you. And if they're not, you just get away from them. And it's not hard because you're being good to yourself. You're being selfish. You're looking out for number one. It's hard, guys. It takes a lot of mental preparation. But if you don't do that mental preparation, what other mental are you doing? Are you sitting at home with extreme anxiety and worry because you don't have enough money or you don't have a plan? Sometimes just having a plan, even if it's far out. Like I said, we'll be doing this for 100 days. Some people feel stressed because they don't have 100 days to learn. But you do. You do. You're going to be here in 100 days. You're going to be here. It might not be great. I mean, your life might suck in 100 days, but guess what? It might not. And even if it does suck, when we get to the end of the 100 days, you're going to have another 100 days. It's okay. You got to stop being a fatalist and look at things like, if you do well for you, things are going to go well for you. It's positive reinforcement, guys. Sure, things will go bad. People live a beautiful, wonderful life. They look out for themselves. They take care of themselves. They take care of other people. They're beautiful, wonderful people. And still, their child gets cancer and dies. Bad things happen to good people all the time. But guess what kind of things happen to bad people all the time? Bad things. So why invite more in? If you can be perfectly good and still one bad thing can happen to you, why would you want to risk more bad things happening by being a bad person? That's bad karma. It's bad juju, whatever you want to call it. What comes around goes around. If people see you being bad to yourself, even if they see you neglecting your health, if they see you neglecting your mentality, they are going to take advantage of you. They are going to neglect your health. They are going to neglect your mentality. If you are sick, I'm talking real sick, I'm talking dying sick, and you go to the doctors and you BS around with your doctor and you tell them, I don't care about my health and I'm fat because I like to eat food and I don't care about my heart. You know what your doctor's going to treat you like? The jerk off that you are. He's not going to take you, or the doctor is not going to take you serious. They're going to give you medicine, and you know what they're going to expect? That you're not going to take it. They're going to give you instructions, and you know what they're going to expect? You not to follow them. For instance, Dr. Now on My 600-Pound Life, he gives those people the entire diet of how to fix their life. And only 5% have long-term success. Yeah, 5%. These doctors are giving these people the key to changing their life, and only 5% actually take that key, put it in the door, and unlock a future that's better. Because they're not selfish for themselves. They're selfish for food. They don't care about their health. They care about the next nugget that they shove into their mouth. And that's just what it is. I am not hating. I'm serious. These people on my 600-pound life, that's what they portray. And even if that's not who they are, by them portraying it to everybody is what they get in return. So my goal to you guys and for myself is for the next 100 days, be selfish. Be selfish with this learning. Make this a priority. If this is what you want to learn, if this is how you want to get better, make this a priority. So this morning when I didn't want to get up at 7:30, it was so cold in my house. It was freezing. Pacific Northwest, guys, it's cold here. I got up anyway. I got up to see you guys, and let's get this learning done. So now that we've had that wonderful talk about getting going, let's get going. Let's get going, guys. Let's learn basics of trading so we can get further into this. If we don't go over these basics, we can't even get to paper trading. And my goal is to get to paper trading this week, guys. Let's learn to paper trade. So why trade stocks? People trade stocks for one reason, guys, to make money. In order to profit, they need stocks to fluctuate. That means the more they move, the better. Stocks got to go up and down, guys. Don't get afraid. People get afraid. Oh, the stocks went down. And then they don't want to invest anymore. Well, that's kind of how you make money, guys. It's when it moves. So stocks are one of the most volatile assets in the public market, much more than the staid asset class of bonds. So we learned what bonds were, guys. Remember, stocks are units of equity in a corporation. So it's like you have part ownership of that company. And when the stock goes up, like say you buy a stock for $5, if it goes up to $6, you earn $1 for every stock you own if you sold it. If not, you're going to have it. And if it goes back down, it goes back down. With a bond, you don't get that volatility. With a bond, they say you're going to get a bond is a promissory note. So you'll get a percentage. Like, it's not a piece of the company. A bond is where you take a loan out and you have a certain amount of time that you're going to have it and a certain amount of percent that you're going to get back. So not equity in the company. You're not owning a part of the company. So stocks aren't as volatile as options. And that's what I was saying, guys. You can get an option on a stock without owning the stock. So you could put a call or a call. You could do a put or a call. Way more volatile. And the reason that options are more volatile than stocks is because these are insurance for stocks. We're going to go through options way more, but an option is insurance on a stock. If you think your stock is going to go up, you can buy a call on that stock and make even more money just by guessing that the stock went up. And it is guessing, guys. I mean, you can use all of their tools and all of the, we're going to learn methods to tell if a stock is going to go up or down, different wedges. We're going to learn that. I'm excited. But first we have to understand the stock market before we can start actually like predicting. How can we predict something if we don't know anything about it? So in order to profit, they need stocks to fluctuate. And the more they move, the better. Stocks are one of the most volatile assets in the public markets, much more than the state asset class of bonds. So they offer a lot of potential to move. Savvy traders can make money both when a stock rises and when it falls, because when it falls, you get a call, you get a put, guys, and when it rises, you get a call. Stocks aren't as volatile as options, however, and that's one reason that options have become a very popular security to trade as well. However, stocks are more forgiving. That is, unlike options that can close all their value over a short time, stocks tend to retain much of their value. So stocks hit a sweet spot. Enough movement to be profitable to trade, but not too much to be utterly ruinous. So you might buy a stock and it's like, let's say it's $1. You buy a stock for $1 and it goes up in the week. It goes up $1. Let's say it goes to $2. It has a big swing. You can sell that stock and make money, But if it goes down to 50 cents, you just lost half of your money. But the thing is, stocks go up and down. Remember, up and down, up and down. So if you just leave it, it's going to go back up, and you can sell when it goes back up to what you bought it at. That's okay. If it goes down too much, if you don't want to lose more, that 50 cents, you could put a stop loss so that you you sell before it goes down any lower. So maybe your stop loss is you paid $1 for the stock and you don't want to lose more than 15 cents per stock. So you put your stop loss at 85 cents. And when the stock drops down to 85 cents, it automatically sells it for you. And wham, bam, thank you, ma'am. All you lost was 15 cents. That's called having risk management, guys. You decide how much you're willing to lose. And we're going to go all over all this. But stocks versus bonds. So 5 steps to start trading stocks. Before you start trading, you'll want to put some thought into why you're trading and the strategy you'd like to employ. And those are what I talked about. There's lots of ways to different strategies that they've made to use to predict the stock market. Okay. So, my coffee got cold. I don't like cold coffee unless it was meant to be cold. Is that weird? I really dig a cold coffee, like with ice in a cup. But when my hot coffee gets cold, I don't like it anymore. I'm going to go warm it up really quick. I'll be right back. And then we will talk about 5 steps to start trading, guys. All right. Get my hair out of the way. My hair is like so long it just gets caught everywhere. It's all the way down here, guys. Bad thing about having long hair, you sit on it. Okay. Let's get this finished. So, we're going to think about what strategy you'd like to. Here's something to think about before you dive in. Decide what kind of trader you want to be. Are you a trader looking to actively manage your way to more wealth? Yes. Are you an investor looking to profit from the long-term appreciation of stocks? Yes. Of course, you could do a little of both. Yes. Keep most of your portfolio, say 90% in stocks, while you use a little bit to trade. And that's the plan. That is my plan, guys. But eventually, the approach you choose will determine your stock ideas, your typical holding period, features you'll need from a broker, and tax impacts. It's also important to note that most traders lose money, so you must have a clear grasp of your goals and process before you begin. On the other hand, investors who buy and hold a broadly diversified basket of stocks, such as the Standard & Poor's 500 Index, may enjoy the long-term appreciation of the stock market with minimal work each year. So identify your process. So you decided you want to trade stocks. What kind of strategies are you going to use? Are you going to be a scalper, trying to get a few pennies on every trade? Or are you going to only buy stocks? Or are you also going to short sell them? At what point will you cut losses and realize gains? That's what we're talking about. Like, are you going to cut it at 15 cents? You have to have that all planned out, guys. Are you going to go to do swing trading, trying to ride a longer up or down move in a stock? Or will you be a day trader, trading in and out of a position in a day or two? Those are just some of the many questions that you may want to ask yourself as you begin trading. Many different approaches can work, and you'll need to find one that works for you and your temperament. The list of questions for those who want to invest is shorter, however, and less varied. How long do you want to be invested? Do you need the money soon? What level of risk are you comfortable with? And this is long-term, guys, investing. Do you want to buy stocks, more risky, or funds, generally less risky? And funds, guys, remember, are the indices, the like where a bunch of people have a bunch together and you put your money in the fund and then, we're going to learn more about them. Don't worry. If you are confused by anything I say, it's okay. We're going to go over all of this stuff so many times. You will get it. That's how I learn. And just, if that's not how you learn, just watch the ones you want. We're going to have a great time regardless. So, how much money do you want to invest, and how much can you add over time? While investors may need to answer a few other questions, the list is much less detailed than for traders. So, third, you need to set up your brokerage account. Choosing a broker will depend on your trading approach. Here are some broker features to consider for different types of strategies. So if you're trading, you may want to consider brokers that offer charting capabilities to help you spot opportunities, or those that have low costs, since you'll likely be making a lot of trades. So like day traders, they might make a lot of trades. They don't want to pay commissions on every trade, so they want to find a broker that gives them free commissionless trades. So, investors, if you're investing, you might opt for a broker that's a little bit pricier, but that offers more research, since you want to find the best long-term picks. If you're investing in funds, you might want to find a broker that offers a wide selection of commission-free EFTs or no transaction fee mutual funds. So a mutual fund, guys, remember, is where a bunch of things are together. Where does it say mutual fund? I thought it would give us a definition. Okay. So beginners, if this is your first time setting up a brokerage account, that's us, guys. You might want to select a broker that's known for providing a high level of customer support, because you're going to need help. Good customer support will be able to guide you through various questions as well as resolve issues. Some brokers also offer excellent educational resources on their site that can get you up to speed on the broker's features and tools. So, the very first time I was trying to trade options on TD Ameritrade with my paper money, I couldn't figure out how to sell a put. I bought a put, guys, which is like insurance on saying that an option or that a stock is going to go down. And I just wanted to kind of see how it works. So I was like, I think that Apple's going to go down, guys. And I bought a put, and it was like $66 to buy the put. And when I woke up the next morning, Apple had indeed dropped. Like, it had dropped down significantly. And I was correct, exactly where it would. And my $66 put was worth $4,000 or $2,500 or something. It was crazy. It was a lot. It was thousands. It was like 2,000 or more. And I was like, what? I need to sell this. But guess what? I couldn't figure out how to sell it. So it had dropped and lost all, because options, they run out of time. They have a time limit. The closer it gets to the time limit, the less it's worth. So when I woke up, it was far enough away from the time limit that it was worth money. But by the time I figured out how to sell a put, I had lost all money in my put. So it was that quick. So it's very good to have good customer support, because you are going to have little questions that you never thought you were going to have. So when you're opening an account, you'll want to have at hand your financial information, including your bank details. The broker will ask for your income range, your overall assets, and other personal questions. You should be able to open most accounts within 15 minutes and may not even have to immediately fund the account, though it's usually a good idea. So I have a TD Ameritrade account, guys. It's never been funded. My bank account's not even hooked. It's not hooked up to it. It's just a paper trading account where I signed up with my name and information. They did ask some questions, but I didn't put my bank account information or anything in it. It's called TD Ameritrade, guys. And I'm going to show you that too. But that's the one I set up. There's also one called Webull, like Webull, Webull. And Webull is also good. I'm going to show you these really quick. Let me see. I'll show you both of them. So Webull is this one, and I do not have this one, but they do have learning. So you can do their paper trader, trading with multiple layers, and they have paper trading here. So you can open an account and learn to paper trade. They also have, the one that I was talking about is TD Ameritrade. And this, oh, I went back to Webull. So that's TD Ameritrade is this one. And you just go and open up a new account right here under my picture. It's under my picture. Open new account. See where it says account? Open new picture or open new account. Right under or right above login. So then they also have educational paper trading. So those are that. You will open an account. So number 4 is find trade ideas. Before you make a trade, you first have to know what to trade. A good brokerage can help with that, as can any number of subscription stock newsletters and even some free sites. So I know some people that would be like, good trade ideas. I know that if you go on YouTube, there's a lot of YouTubers that, I don't know, they have like a group and then they send out like group information of what they're trading that day. So it's like a little trading group. So you can join one of those. I don't have one. I don't know what to trade. I am still at the infancy. I'm at step 3, guys. I haven't found trade ideas yet, but we're going to find them. We'll find them together, and then we'll be our own little cool group. So if you're a trader, your broker may provide ideas for you, or you may have to do your own research to find interesting setups. That can mean analyzing lots of stock situations. For example, stocks at 52-week high or lows to see if they look like they'll continue trending. Your broker should support your approach with charting capabilities and other technical studies. So if, like, let's say, for instance, you wanted to do call options. I don't know enough about trades to give you guys good examples, but I can show you. You can look for high volatile stocks today, and that will give you most volatile U.S. trading stocks. So we're looking at if they have a big change, one-day change, that means they're moving up or down. So then you might be able to predict if it's going to move back down and buy an option, which would be a put, and make money off knowing that this was going to go down. Anything less than $1 is called a penny stock, I believe, but I don't know much about them. We're going to get there, guys. I promise. So if you're an investor, the broker may also provide research, such as reports on the company's business and prospects for the future. And the great thing about those sites that I gave you guys, TD Ameritrade and Webull, they do that. They give all kinds of reports. In TD Ameritrade, you can pull up the news, and it will pull up all news articles on that stock. Like, say, Apple, another example on Apple. If you pull up Apple and TD Ameritrade, you can look at all of the news for Apple. It'll give you all the news that, for weeks back. I mean, everything. Anything that's been in the news, it provides it with you. So that's really helpful. But you can also turn to third-party research, some of which has an excellent track record. And these are paid places. You can actually pay for third-party research. You'll need to develop investing ideas on your own though the broker may provide some ideas to kick off your hunt for stock options or stock riches. Whether you're trading or investing, you'll also want to consider when it may be best to sell a position. For traders, you'll often sell when the stock hits a certain price, either a gain or a loss. That may also be the case with investors, though they may also hold a stock indefinitely, riding a high-flying stock for decades with no intention of ever selling. Like, I know that there are people that own Berkshire Hathaway, and no matter if it goes up or down, they hold on to Berkshire Hathaway until the day they die. It's like part of their retirement plan. So step 5 is execute the trade. And that is where we are hoping to get soon, guys, where we can execute a trade and start learning. Because just like shooting a basketball, if you don't shoot the basketball a billion times, you're not going to be good at shooting the basketball. So if we don't get in there and execute these practice trades, we're not going to know how to trade. Once you found what you're going to trade, then it's time to execute the trade. Make sure you know your basic order types. Though most brokers have more complex options than just these two. They sure do. In TD Ameritrade, there's a bunch of different options, guys. So we have to learn all of them. This right here is a good start. A market order will execute at whatever the best price is at the time you place the order. That is, if you place a market order to buy a stock, you will buy at the lowest asking price currently. If you place a market order to sell a stock, you will sell at the highest bidding price. So if you make it a market order, you get to sell your stock. Let's say you own Apple stock and you sell it as a market order. Whatever the best price is, that's what you're going to get. But asking price, it's not the price that is available on the stock. Look, let's see. You guys, I really like Yahoo Finance. If you want to look at stocks, Yahoo Finance is pretty nice. App lovin'. That's not what we want. We want it Apple. App lovin'. Okay, so this Apple, let's look at the one day.
But not everyone.
Okay, so here's the chart of Apple. And this is a high and this is a low. So, you know, if you had Apple and you were trying to make pennies, you might have bought it when it was really low down here and sold it when it got high. You see how far away that was? This was on 6/15. And by 8/18, 2 months later, it had went up how much? Look, if you bought it here, 6/14/22 at $130. You could have got it way down here at $130. And then 2 months later, at 8/16, exactly almost 2 months later, it was at $174. You'd have gained $40. In 2 months, each share would have gained $40. So if you would have just held your shares for 2 months, right here, if you would have held your shares for 2 months, you would have gained $40 a share. That means that if you had invested, it's $150 a share. If you would have bought $130 a share, if you would have bought 2 shares, let's say we're really broke. If you would have bought 2 shares for $260, 2 months later, you would have made yourself $80. And now, 2 months later, you'd have, you invest $260, you make $80, you would have $340 to start investing on. That means you have an $80 gain in 2 months right here. And that's just this. This is just one example, guys. There's way quicker ones. You could have did it here, 6/16 to 6/27. That's just a couple days, and it gained $11. So if you bought 100 of these and you only held them for a couple days, you can make a couple $100 off of a couple stocks. So it's there, guys. And this is a great website to look. Bullish Up. This is so much fun, guys. I get so sidetracked because it's so much fun. Okay, so a limit order, that's a market order. So if you buy a market order and it says, the market says 158 right now, but the highest asking price is 159, you're going to pay 159 even though the stock is only at 158. So you might lose money going in with a market order. One time I ordered something and I used a market order because I didn't know what I was doing. And the stock said 150, I don't remember what I said, but it said like 158, but I bought the stock for 160. So I paid $2 more for the stock. So when the stock dropped, I lost more money than I even put in. So you have to be really careful about the type of order you get. A limit order is different than a market order. You specify to the broker what price you want to get or what price you're willing. Like if the broker can get the price or better, a higher price sells or a lower price for buys, then the trade will be executed. So if you want to do a limit order, you say, okay, well, the stock right now is, what's it at? 158. And it looks like, let me see. Okay, zoom in on this. Let's go to 1 day. It looks like it is headed up, right? Looks like the stock's headed back up right here. So we say, okay, well, it looks like it's headed up, but if it drops back down here to the low, to 158, then I'll buy it. That means you use a limit order. A limit order allows you to say, if the stock drops down here to if the stock drops down, way down here to 150, then I will buy it. And that means that the broker will only pay for that price. You could also do it with selling. So if your stock is here, you bought it here at 150, you could say, oh, it's looking good here. Look at our stock is going up. So you say, okay, if it goes all the way up to 159, I want to sell it. So you would use a limit order. That's the difference between a market order and a limit order. A market order is going to use whatever price, the best price at the time of the order. A limit order will specify what price you want to pay or what price you want to sell it at. Simple. So one important point to remember with these order types is that you're beholden to the market when you place a market order. You're going to get whatever the prevailing price is. That's not likely to cost you anything on large, highly liquid stocks. But you may spend or lose more money if you use a market order for smaller, less liquid stocks. And that's what I did. But that's okay. You learn and you live and you learn, guys. You don't use a market order unless you want to get in super quick and you don't care about the price you're paying. Other than that, you make a limit order or other orders. There's other orders too, and we will learn about them. Finally, once you own the stock, you can carefully watch for when you want to sell, or can be less attentive if you aim to hold the stock for years. In fact, investors might relish when a stock drops because it may offer an attractive price to buy the stock. So if Apple dropped to 120, right now it's 158. If Apple dropped to 120, lots of people will be like, oh my gosh, Apple lost all this money. And now and they cry. Some investors might be like, yes, time to buy that Apple. And they buy $1 million worth of Apple while it's really low, and then they sell it when it's really high. So you can see why somebody might be happy and relish when a stock drops. Okay, guys, we're getting there. How to protect your portfolio. This is risk management, guys. This is the most important thing we'll talk about ever. Every time we talk, risk management is going to be your most important topic, okay? This tells us how we're going to keep our portfolio without blowing it up, without losing our shirts, okay? So when we talk about risk management, you have to be uber duber serious, okay? So trading is difficult to succeed at because there are many ways to screw it up. Lots to learn, guys. Learning. And we're going to be here together learning so we don't mess it up. Whether trading or investing, here are some important tips to keep you from blowing up your portfolio. 1, manage risk. Every time you lose money, it's like a loss of future earnings potential. True, guys. If you lose $50, that's $50 you could have made more money with. And that's why it's absolutely vital to keep from losing money. Of course, many trades will be losers. Traders who want to trade another day should know how to manage risk so that they don't bleed cash when they do make a bad trade. So that's why one of the first rules of trading is to cut losses before they turn into big losses and then into catastrophic losses. You won't get a catastrophic loss if you always sell when you're down 3%, for example. That's what we're talking about. Excuse me, guys. Oh, this weather. Pacific Northwest will get you guys. It's beautiful. But in this winter, it has been cold. Okay, so that's what I was talking about, having a stop loss, guys. When you're down, like maybe you say you bought it for $1, but you only want to lose 3 cents, 3%. So you will sell your stock if it goes down 3%, which is 3 pennies. And maybe that's how you that's how you won't get a catastrophic loss. You have risk management. By taking an early loss, you can prevent it from becoming crippling to your portfolio. And I know a lot of people look at these stock things. They look at it. Maybe they bought way here, right? They bought here. And they thought, as soon as it goes up, I'm going to sell it. But when they were up, they didn't sell it. They thought, it's going to go higher. And so then it went down. And then they were like, oh, no, we're going to wait for it to go back up higher again. And it went back up higher. And they were like, okay, it's going to go higher. We don't need to sell. And then it dropped down. So they didn't sell. They're missing all these highs to sell. And then it went back up again. And they still didn't sell. They said, it's going to go higher. And then it dropped back down. Guys, don't get caught in that. You see how many times you can buy this stock? There's no limit. If you sell it here, if you buy it here and then you sell it right here, right? You sell it. You see you guys are going to go higher. Wait for the next drop and buy it again. It's going to drop. These are stocks, guys. That's what they do. They go up and down. They're volatile. That's how you make money off of something, by making it volatile. We learned that today. So don't be afraid when it goes down. Sell it. Don't lose your money. There's no rush to go up to the moon. You can always buy the stock again. It's going to be here. Nobody's going to buy out all the stock. Trust me. So, risk management, guys. You always take a loss early to prevent it from becoming crippling to your portfolio. You don't want, with $5,000, to lose a $2,000 stock trade. That's most of your money. That's almost half. Ultimately, that means you may be taking small losses in order to prevent the massive loss. Psychologically, it's tough to take a loss, even a small one. But risk management is the most important skill a trader can have. Most important skill a trader can have, guys. Risk management is the most important skill a trader can have. Taking an early loss can prevent it from becoming crippling to your portfolio. Don't be afraid to sell. Don't be afraid to, when you bought here, let's say you bought here and now it's here. You've lost money. Just sell it. You know what you could do? You know what you can do? You can buy again here and sell it here and make your money back. It's okay. We got to have those ideas that it's okay, guys. Psychologically, we have to get smart and we have to get tough. So next, you diversify your positions. Diversification is another form of risk management. It has the potential to increase your total returns too. Whether you're a trader or investor, it's important not to have all your money in just one or few investments. You know what they say, guys. Don't put all your eggs in one basket. By diversifying across multiple investments, think 10 or 20 or more, you drastically reduce the chance that one position will hurt your portfolio. Plus, diversification helps to smoothen your returns over time versus a few volatile stocks dictating your returns. So if you put all your money in Apple and it goes down and you lose a couple cents, you had all your money in Apple. Now you've lost a portion of all your money. But if you only had, let's say out of $5,000, you only had $1,000 in Apple, you only lost a fifth, 1/5 of your total portfolio. We have to be very smart, guys, because we're going to have small portfolios when we start out. So stay away from pump and dump schemes. As you're starting to trade or invest, you'll want to be wary of hucksters promising quick returns. Often these frauds will post about some unknown penny stock or an internet message board hoping to lure on a new. So like Reddit, guys, please don't listen to all the Reddit people. You have to learn for yourself. Do not just take advice. Learn, guys. Unfortunately, the goal of these schemes is to move the stock price higher with a quick burst of hype, followed by insiders selling the stock to take advantage of the run-up. That's why it's called a pump and dump. So, if you get on the internet and they say, oh, this stock, it's so good, it's so good, it's so good, and then you put $5,000 into that stock, guess what they're going to do? They're going to turn around and sell their shares and drop that stock, and you just lost money. Do not invest all of your money in a pump and dump scheme. You can try it. You can try it. Give it a go. Put a little bit. Have some, what do they tell us to have? Risk management. Maybe you only want to lose 3%, so you put a stop loss. You go and you try this out, and when you find out that they're pump and dumping it, you only lose 3%, so you're perfectly fine. Trading is hard work, and no one knows with certainty how a stock is going to perform. But traders can make it easier on themselves by only buying and selling legitimate companies. Don't buy something you don't know about. That is why we're learning how to learn, so we can learn how to research so that we don't buy a pump and dump. Practice virtual trading, and that is what we are going to get to this week. Many brokers allow you to trade virtually or with paper money so that you can test and refine your skills before you go into the market with real money. You can sign into the broker and trade exactly as you would normally without incurring any penalties or for being wrong. Then, when you're ready for the real thing, you could switch back and give it a go. As you practice, however, track your performance so that you have an accurate gauge of how you would do in reality, not just rely on your subjective impression. This is learning, guys. We're talking about math. I want you to write your trades down. I want you to have a trade journal. That's our goal, guys. We're going to have a trade journal. I already have a learning journal, guys, a learning journal. Get yourself a learning journal so you could write down questions. My next question that I wrote down is understanding company statements and capital structure, assets versus liability, basic accounting. So I need to learn basic accounting so that I can watch my money, guys, and so do you. So that's what we'll be doing this week in addition to learning paper trading. So, have you gained or lost money on your transactions? How did you react? Did it make you want to throw something across the room? Or did you have good risk management? And don't forget that you'll probably trade much differently with your real money when your emotions are on the line. So we have to learn to control our emotions, guys, with our real money. No emotions. We can lose 3% and then that's okay. We have to learn that and we are going to practice it. So bottom line, when you first begin trading or investing, it can seem overwhelming at first. And that is why I'm doing this, guys. Don't be overwhelmed. We can do this together and then none of us will be overwhelmed. You can ask me, I can ask you, we can have a little team. It'll be like money team. And we will do better. So the biggest step is just getting started. And here you are. Here I am. We're getting started. So we did the biggest step, guys. We already got started. We did the biggest step. Then you can find a style that fits you and your temperament. Those who want to invest for the long term and put less effort into their investments can practice buy and hold investing, while those who live for an exciting trade can become traders. Or you might not live for an exciting trade, but you really might need to grow a small amount of money faster, so you want to be doing more trades. One beautiful thing about the market is that you get to choose the style that works for you, and many styles can be successful. So that is it, my friends. We have learned all the basics of how to become a trader. We know what a stock market is. We know what a stock is. We know what a bond is. We know about risk management, the most important thing. We know about several types of traders. That's it. We know we have to identify our process and we have to start paper trading. So we are on a roll for what we are going to start doing. And I am excited for tomorrow. So no homework. It was a long day today. We did an hour and 18 minutes of learning, and I am proud of everybody who watched all the way through. You are extremely the GOAT. Yeah, the greatest of all time, because here you are learning and you don't have to be. This is just for yourself, selfish learning to make your life better. And I promise that it will. Even if you don't make $1 from trading, how could you ever be worse off for learning something, especially money? If you can understand money better in a world that's all about money, your life will be better regardless. So it was great seeing you, neighbors, and I hope that you come back tomorrow. And if you haven't seen the other parts, they are all in a folder listed the stock market so that we can learn together. We're going to do this pretty much every day. I'm thinking not on the weekends, but Monday through Friday, we will be here learning in the morning. We're trying to get earlier and earlier, guys. Our goal is to be up and going by 6:30 a.m. That is when the market opens, because when we start paper trading, we need to be there. So I'm changing my sleep habits. I hope you are too. I'm changing my money habits. I hope you are too. And I'm changing my learning habits. And I really do hope you are too. So that is it for today, my friends. I hope to see you next time. I will be here same time, same place.